Equity as an asset class is typically viewed as suitable for long term, although this may not necessarily be true for stocks or for the portfolio. Can you elaborate more on this?
Yeah. See, when we talk about equity as an asset class or investor, okay, equity investor, they are long term. Okay, when we talk about sector and stock, not necessary. Okay, this is a myth when we say you buy stock from a longer term perspective. See, when you are in the very infancy stages of the market, early stages, like India was emerging market, that thesis will work very well. Okay, but if you really look at from a longer term perspective, what is very important is that asset class long term, investor is long term, and stocks and sectors are not long term. Okay, so this is a mistake which people do. People get associated from a longer term perspective, and sometimes industry dynamics change completely. Okay, and you don't get exit. Okay, so we play our thesis on the money flow analytics. We try to see how the risk appetite and liquidity of the sector is changing. Today, whole world talks about valuations are expensive. Yes, valuations are expensive, and people give example what happened in 2018, what happened in 2007-8. But if you look at one unidirectional approach, valuation look expensive. But when you look at the multidimensional approach, look at when this type of valuation was there, what was the risk appetite for Indian stocks? Okay, what was the risk liquidity for the Indian market? The dynamics is completely different. So when you look at the three-dimensional approach, looking at the liquidity aspect, risk appetite, which is sentiment, and then look at the valuation, if the trinity is proper, then you get an answer.